When we plan for our future, we often focus on tangible goals, building a nest egg for retirement, buying a home, or paying off debt. These are important milestones. But there's another piece of the financial puzzle that often gets overlooked: the cost of long-term care. As we age, our health needs inevitably change. While we might anticipate working hard to save and invest for the future, many of us fail to plan for the possibility that, at some point, we may require assistance with daily activities or medical care. The reality is that as we age, the likelihood of needing long-term care increases. Whether due to chronic illness, a sudden injury, or simply the natural progression of aging, the need for long-term care can strike unexpectedly. When it does, the costs associated with this care can be overwhelming. Without proper planning, these costs can quickly deplete years of savings and hinder your ability to live comfortably in your later years. This is where long-term care insurance comes in. Long-term care insurance, LTCI, is designed to cover the cost of services such as in-home care, assisted living, or nursing home care. It's a vital tool in preserving both your health and your wealth as you age. However, many people underestimate the financial burden of long-term care or assume that Medicare or traditional health insurance will cover it. Unfortunately, that's not the case. Medicare covers only limited, short-term care, and many traditional health insurance policies don't cover custodial care services that help with daily living activities such as dressing, bathing, and eating. In this audiobook, we will guide you through the ins and outs of long-term care insurance. We'll explore why it's essential to plan for long-term care, how to determine if LTCI is right for you, and how to select the best policy to meet your needs. You'll learn how to evaluate the costs, benefits, and coverage options available to you, and how to integrate LTCI into your broader financial strategy. By the end of this audiobook, you will have a clear understanding of the importance of long-term care planning, empowering you to make well-informed decisions about your health and financial future. Your future health needs are something you can prepare for, and by taking action today, you can ensure that you'll have the support you need as you age, without compromising your financial security. Let's start this journey of understanding long-term care insurance and begin securing a healthier, wealthier future for yourself. Chapter 1. What is long-term care and why is it important? As we age, our bodies and minds undergo significant changes. While many of us plan for the expected milestones of aging, retirement, traveling, spending more time with family, there is one crucial aspect of aging that we often overlook: the need for long-term care. Long-term care is not something we generally think about when we imagine our golden years, but it is something that most people will require at some point. Whether it's due to a chronic illness, a disability, or the simple process of getting older, long-term care can become an essential part of maintaining quality of life as we age. In this chapter, we'll dive deep into the concept of long-term care, why it's a critical part of retirement planning, and why understanding and preparing for this need is essential to securing your financial future. We'll also examine how long-term care can affect your overall financial plan, and why failing to plan for these expenses could result in a financial catastrophe. Defining long-term care. Long-term care, LTC, refers to a range of services that are needed when someone cannot perform the basic activities of daily living, ADLs, due to aging, illness, or disability. These activities include tasks like bathing, dressing, eating, toileting, and transferring, getting in and out of bed or chairs. Long-term care is needed when someone requires extended assistance with these basic functions, either due to a chronic condition or the gradual effects of aging. It's important to distinguish long-term care from regular medical care. While medical care is focused on treating illnesses or injuries, long-term care is focused on supporting a person's ability to live independently or comfortably, even if they can no longer care for themselves fully. This type of care can be provided in various settings, including at home, in assisted living facilities, nursing homes, or specialized care facilities. LTC can be provided in many forms, such as in-home care. This includes services such as help with personal care, housekeeping, meal preparation, and companionship. In-home care is typically less expensive than facility-based care, but it still comes with significant costs, especially if the need for care becomes long-term. Assisted living. This is a step up from in-home care. Assisted living facilities provide housing, meals, and personal care assistance, but they are designed for individuals who still maintain some level of independence and do not require 24/7 nursing care. Nursing home care. Nursing homes provide the highest level of care. They offer 24-hour medical care, assistance with daily activities, and supervision. Nursing homes are often needed when individuals require constant medical monitoring or when family members are unable to provide the necessary care at home. Hospice care. This type of care focuses on providing comfort and support for people who are in the final stages of an illness, particularly those who are terminally ill. It's typically provided in a person's home or in a hospice facility. Why is long-term care important? Long-term care is essential because it supports the continued well-being of individuals who can no longer fully care for themselves. As we grow older, the likelihood of needing some form of long-term care increases. In fact, studies show that nearly 70% of people over the age of 65 will require some form of long-term care at some point in their lives. It's not just for the elderly. Accidents, chronic diseases, or disabilities can affect people at any age, making it important to understand long-term care options even earlier in life. One of the critical reasons why long-term care is so important is that it can impact your financial stability. The cost of long-term care can be staggering, and without proper planning, it can quickly drain your savings, forcing you to sell assets or rely on family members to cover expenses. In addition, the emotional and physical toll on families and caregivers is immense, and the costs associated with caregiving can impact the overall quality of life for everyone involved. Long-term care also affects our independence. As we age, maintaining our independence becomes increasingly important. It allows us to live with dignity and continue enjoying our lives. However, when we need assistance with daily activities, our ability to maintain that independence becomes compromised. By preparing for long-term care needs, we can ensure that we remain as independent as possible for as long as possible. The financial impact of long-term care. While the physical and emotional impact of needing long-term care can be significant, the financial impact is just as crucial to understand. The cost of long-term care can be astronomical, and without proper insurance or planning, it can quickly drain your savings and derail your retirement plans. The average cost of long-term care varies significantly depending on where you live and what kind of care you need. In the US, for example, the average cost for a private room in a nursing home is approximately $100,000 per year. Assisted living facilities can cost anywhere between $3,000 and $7,000 per month, depending on the location and level of care needed. Home health care, while often less expensive, can still run up to $4,000 per month for just a few hours of assistance per day. These costs typically aren't covered by traditional health insurance or Medicare. While Medicare covers short-term skilled nursing care, it does not cover custodial care, which is the type of long-term care that most people will need as they age. Medicare will also only cover a portion of the cost of rehabilitation or therapy services, leaving individuals and families to pay the difference. Given these high costs, long-term care can rapidly deplete a person's savings, potentially leaving them with nothing but their Social Security benefits or whatever family members are able to contribute. In fact, long-term care costs are one of the leading causes of financial instability for older adults, often forcing them to deplete their savings and exhaust their retirement funds much sooner than expected. Why traditional insurance isn't enough. You might be thinking, won't Medicare or my current health insurance cover long-term care expenses? The answer, unfortunately, is no. Medicare, the U.S. government's primary healthcare program for individuals over the age of 65, provides only limited coverage for long-term care. It covers short-term stays in skilled nursing facilities or rehabilitation centers up to 100 days, but it doesn't cover long-term care services like custodial care or in-home care. Similarly, traditional health insurance plans generally cover only medical treatments and hospital stays, not long-term care services. Many people wrongly assume that Medicare or their regular insurance will cover their long-term care needs, only to find out too late that they will need to cover these expenses out of pocket. This is why long-term care insurance is an essential piece of the puzzle for long-term financial planning. By having the right coverage in place, you can ensure that you're not burdened with paying for care entirely out of your own pocket. Long-term care insurance can cover a wide range of services, from in-home care to nursing home stays, and it can significantly reduce the financial strain that long-term care may place on your family. When should you start planning for long-term care? The best time to start planning for long-term care is earlier than you think, ideally in your 40 seconds or 50 seconds. Waiting too long can make long-term care insurance prohibitively expensive or even unattainable if you develop health issues that disqualify you from coverage. The younger and healthier you are when you purchase a policy, the more affordable it will be, and the more likely you'll be able to secure comprehensive coverage. Planning early for long-term care allows you to build a comprehensive financial strategy that includes not only saving for retirement, but also budgeting for the costs of potential care. It's essential to consider your long-term care needs in the context of your overall financial plan. This might include savings, investments, insurance, and possible income streams. By starting early, you'll be able to secure the right amount of coverage and avoid the financial strain that can come with long-term care needs. While no one wants to think about the prospect of needing long-term care, planning for it ensures that you're prepared when the time comes. Conclusion: preparing for the inevitable. The need for long-term care is not something we can predict, but it's something we can plan for. With the aging population, the likelihood of needing some form of long-term care increases significantly, and the financial burden can be overwhelming without the right preparation. Long-term care insurance is an essential tool for safeguarding both your health and your wealth, ensuring that you can maintain a good quality of life without depleting your savings. Understanding what long-term care entails, why it's important, and how to plan for it is a critical part of your overall financial strategy. By considering long-term care in your retirement planning, you can protect yourself, your family, and your financial future from the unexpected costs that often accompany aging. Start planning today and take control of your future health needs. It's never too early to begin thinking about long-term care, and by taking action now, you ensure that you'll have the peace of mind you deserve in your later years. Chapter 2: Understanding Long-Term Care Insurance, LTCI. As we age, one of the most important aspects of financial planning is preparing for the possibility of needing long-term care. While many focus on saving for retirement and paying off debt, long-term care expenses are often overlooked. However, the reality is that at some point in our lives, most of us will require some form of long-term care. This is where long-term care insurance, LTCI, comes into play. It helps protect your wealth and your future by covering the high costs associated with long-term care services. In this chapter, we will explore what LTCI is, why it's crucial, and how it fits into your overall financial strategy. We'll also discuss the different types of LTCI policies, key features to consider, and how to determine if LTCI is right for you. What is long-term care insurance, LTCI? Long-term care insurance is a type of insurance that helps cover the costs of long-term care services. These services are typically needed when an individual can no longer perform basic activities of daily living, ADLs, due to aging, illness, or disability. ADLs include tasks such as bathing, dressing, eating, and moving from place to place. Unlike health insurance or Medicare, LTCI is specifically designed to cover custodial care, which is not typically included in other types of insurance. LTCI can help pay for in-home care, nursing home care, assisted living, and other types of care services. With the average cost of a nursing home or assisted living facility running into the tens of thousands of dollars per year, LTCI provides a financial safety net that protects your savings and your future. Why is LTCI important? The importance of long-term care insurance lies in the rising costs of care and the gap in coverage left by Medicare and traditional health insurance. Medicare, which is available for individuals over 65, only covers short-term skilled nursing care after hospitalization. It does not cover custodial care or ongoing assistance with daily activities. Health insurance generally only covers medical treatments and hospital stays, not long-term care. Without LTCI, individuals may be forced to use their personal savings or rely on family members to help pay for care. In some cases, individuals may have to sell their home or liquidate assets to cover care expenses. As the need for long-term care increases with age, the financial burden can be devastating. LTCI helps alleviate this financial strain, allowing you to maintain control over your care and your wealth. Types of long-term care insurance policies. There are several types of long-term care insurance policies, each offering different levels of coverage and benefits. The right policy depends on your financial situation, health, and preferences. Here are the main types of LTCI policies available. 1. Traditional long-term care insurance. Traditional LTCI policies are standalone policies that provide coverage for a specified period, typically 2 to 5 years. These policies cover the costs of long-term care services, including in-home care, nursing home stays, and assisted living. You pay premiums in exchange for coverage, and the policy will pay for care when you need it. The advantage of traditional LTCI is that it provides clear, direct coverage for long-term care services. However, premiums can increase over time, and there's a risk of paying for a policy that you may never use. Traditional policies also typically require you to pay premiums for several years before you can start using the benefits. 2. Hybrid long-term care insurance combination policies. Hybrid LTCI policies, also known as combination policies, combine long-term care insurance with life insurance or annuities. These policies offer a dual benefit. If you don't need long-term care, your beneficiaries will receive a death benefit. But if you do need care, the policy covers long-term care expenses. Hybrid policies provide the security of life insurance or annuities while also offering the benefits of LTCI. This can be a good option for individuals who are concerned about paying for insurance they may not use, but still want to ensure their premiums aren't wasted. However, hybrid policies tend to be more expensive than traditional LTCI. 3. Asset-based long-term care insurance. Asset-based LTCI combines long-term care coverage with a life insurance policy or annuity. With this type of policy, you use a portion of your savings or assets to fund the long-term care coverage. If you need care, the policy pays for it, and if you don't, your beneficiaries receive the benefits of the life insurance or annuity. Asset-based policies are appealing to individuals who have significant assets and want to ensure their wealth is protected while also covering potential long-term care expenses. These policies may require a lump sum payment, making them less flexible than traditional policies, but they offer a strong combination of benefits for those who want both long-term care coverage and a death benefit. Key features of LTCI policies. When considering a long-term care insurance policy, It's important to understand the key features that affect your coverage and costs. These features include 1. Benefit period. The benefit period refers to how long your LTCI policy will pay for your long-term care services. The typical benefit periods range from 2 to 5 years, but some policies offer lifetime coverage. A longer benefit period provides more security, but comes with higher premiums. Choosing the right benefit period depends on your expectations for care. If you anticipate needing long-term care for several years, a longer benefit period may be appropriate. However, if you're healthy and don't expect to require care for long, a shorter benefit period might suffice. 2. Elimination period. The elimination period is the waiting period before your LTCI benefits begin. It's similar to a deductible and can range from 30 to 90 days. During this period, you'll need to pay for care out of pocket. The longer the elimination period, the lower the premiums. But it means you will have to bear the cost of care for a longer period before the insurance starts covering it. When choosing an elimination period, consider your financial situation and how quickly you can afford to pay for care out of pocket before your insurance kicks in. 3. Daily benefit amount. The daily benefit amount is the maximum amount your policy will pay toward your care on a daily basis. You will need to choose a daily benefit amount that reflects the expected cost of care in your area. The national average for a private room in a nursing home is over $100,000 per year, which breaks down to around $275 per day. It's important to select a daily benefit that will cover at least a significant portion of your care expenses, but it's also wise to leave room for inflation, as care costs are likely to rise over time. 4. Inflation protection. Inflation protection is a feature that increases the daily benefit amount to keep pace with the rising costs of care. As long-term care costs increase over time, inflation protection ensures that your coverage remains adequate to cover future care needs. Without inflation protection, the value of your benefits may diminish over the years. This feature is especially important for younger individuals purchasing LTCI, as the need for long-term care could be decades away, and inflation will likely increase the cost of care significantly by the time it's needed. When should you consider LTCI? The best time to purchase long-term care insurance is in your 40s or 50s, when you're still healthy and premiums are more affordable. While you don't need to buy LTCI in your 30s, waiting too long can make the policy prohibitively expensive or even unattainable if you develop health problems. By purchasing LTCI early, you lock in more affordable rates and ensure that you have coverage when you need it most. LTCI is particularly important for individuals who want to protect their assets and avoid relying on family or government programs like Medicaid. If you have significant savings or a strong retirement plan, LTCI can help preserve those assets by covering the cost of long-term care. Conclusion: why LTCI is an essential part of your financial plan. Long-term care insurance is a crucial component of a comprehensive financial strategy. It provides peace of mind by ensuring that you won't be financially burdened by the high costs of long-term care. By understanding LTCI and its benefits, you can make an informed decision about whether it's the right choice for your future. Whether you choose a traditional policy, a hybrid policy, or an asset-based policy, LTCI offers a way to protect both your health and your wealth. Planning for long-term care may not be an easy conversation to have, but it's one of the most important steps you can take to safeguard your financial future. Start early, assess your needs, and choose the right LTCI policy for you. By doing so, you'll be better prepared to handle whatever the future holds without sacrificing your savings or your peace of mind. Chapter 3. When should you consider purchasing LTCI? Long-term care insurance, LTCI, is a key part of planning for your future, but understanding when to purchase it is just as important as knowing why it's necessary. Many people delay purchasing LTCI because they think it's too early or they're unsure when the right time is. The timing of purchasing LTCI affects both the affordability of the policy and its coverage. Buying it at the right time ensures you get the most out of your premiums and benefits. In this chapter, we'll explore the ideal age to purchase LTCI, key factors to consider, and the potential risks of waiting too long or buying too early. The ideal age to purchase LTCI. The best time to purchase LTCI is generally between the ages of 40 and 60. This range strikes a balance between affordability, good health, and providing enough time for the policy to accumulate meaningful benefits. While the exact timing can vary depending on individual circumstances, these age ranges are considered ideal for several reasons. Lower premiums. Premiums for LTCI increase significantly as you age. The younger you are when you purchase the policy, the lower your premiums will be. Purchasing LTCI in your 40 or 50 allows you to lock in lower premiums, ensuring that you can secure affordable coverage for the long term. By waiting until you're in your 60 or beyond, you may find the premiums unaffordable or the coverage insufficient. Better health. Insurance companies consider your health when determining your eligibility and premiums. The younger and healthier you are, the more likely you are to qualify for LTCI at a favorable rate. If you wait too long, pre-existing conditions might disqualify you or lead to higher premiums. By purchasing LTCI in your 40 or early 50, you ensure that you're still healthy enough to secure a good policy at an affordable price. Time to build equity. Long-term care insurance works best when you've purchased it early enough for the premiums to accumulate and provide significant coverage. Starting in your 40 or 50 gives you ample time to build up the policy's value, ensuring it will cover a meaningful portion of long-term care costs if you need it later in life. Assessing your readiness for LTCI. While the ideal age to purchase LTCI falls between 40 and 60, your readiness for LTCI depends on several personal factors. These include your health, financial situation, family health history, and retirement plans. Let's explore these factors in more detail. 1. Health considerations. Your health plays a significant role in determining when you should purchase LTCI. The younger and healthier you are, the better the premiums and coverage options available to you. Insurers evaluate your medical history and may decline coverage or raise premiums if you have certain health conditions, such as diabetes or heart disease. If you are in your 40 or 50 and in good health, this is the best time to purchase LTCI. The earlier you buy, the more affordable your premiums will be, and the more options you'll have for coverage. Waiting until you're in your 60 when health issues are more likely to arise, increases the risk of being denied or receiving higher premiums. 2. Financial situation. Your current financial situation is another important consideration. While LTCI is an investment in your future well-being, it's also a significant financial commitment. Premiums can be expensive, so you need to assess whether you can afford them while still meeting other financial goals, such as saving for retirement or paying down debt. If you're in your 50 and have more financial stability, perhaps you've paid off major debts or your children are financially independent, this could be an ideal time to consider LTCI. Having the financial flexibility to afford premiums without stretching your budget is key to making sure you don't sacrifice other financial priorities. 3. Family health history. Your family health history is a strong indicator of when you should purchase LTCI. If your family has a history of chronic illnesses, such as dementia or Alzheimer's, it may be a sign that you're at higher risk of needing long-term care. In this case, it may make sense to purchase LTCI earlier in life to protect yourself from potentially high care costs later on. On the other hand, if your family has a history of good health and longevity, you might feel comfortable waiting longer to purchase LTCI. However, remember that health is unpredictable, and it's always better to have the coverage in place early, so you don't find yourself scrambling when it's too late. 4. Retirement plans. As you approach retirement age, long-term care insurance becomes more essential. You likely have a fixed income once you retire, and paying for long-term care services out of pocket can quickly deplete your savings. By purchasing LTCI in your 50 seconds or early 60 seconds, you secure coverage while still working, ensuring that you'll be prepared for any future long-term care needs without draining your retirement savings. If you've already saved a significant amount for retirement, LTCI can help preserve those assets by covering the high costs of long-term care. Without LTCI, you may be forced to use your retirement savings, which could negatively affect your ability to maintain your standard of living in retirement. The risks of waiting too long. While it's important to purchase LTCI before you reach your 60 seconds, delaying the decision too long can have serious consequences. Here are some risks associated with waiting too long to buy LTCI. Rising premiums. The cost of LTCI premiums increases with age, and waiting until your 60 seconds or 70 seconds can make premiums unaffordable. If you wait too long, you might find that the premiums are too high for your budget, or you may not be able to get the coverage you need. The earlier you purchase, the more affordable your premiums will be. Health complications. As you age, the likelihood of developing health issues increases. Waiting too long to purchase LTCI could result in health conditions that either prevent you from qualifying for coverage or cause your premiums to rise significantly. Once you develop chronic illnesses or disabilities, it may be too late to purchase a policy at an affordable rate. Limited coverage options. Insurance companies tend to offer fewer options to older applicants, and the types of policies available to you may be limited. Waiting too long may force you to choose policies with fewer benefits or higher costs, reducing the value of the policy you ultimately purchase. When it's too early, considerations for younger individuals. While it's ideal to purchase LTCI between 40 and 60, some people in their 30 seconds may feel that it's too early to worry about long-term care. In your 30 seconds, you may not have considered the possibility of needing long-term care, especially if you're still in good health and focused on other financial priorities, like buying a home or saving for education. For younger individuals, it may not be necessary to buy LTCI immediately. However, it's never too early to start thinking about your future health and care needs. If you're in your 30 seconds or early 40 seconds, you can begin researching LTCI policies, understanding the costs, and determining when the right time to buy will be. By the time you reach your mid-40 seconds, you can start seriously considering LTCI as part of your broader financial strategy. Conclusion: the right timing for LTCI. The decision to purchase long-term care insurance is an important one, and the timing is crucial. The best time to buy LTCI is generally in your 40 seconds or 50 seconds, when premiums are more affordable and you're still in good health. However, everyone's situation is unique. Your personal health, financial readiness, family health history, and retirement plans all play a role in determining the right time to purchase LTCI. The key is to start planning early. Don't wait until it's too late or until premiums become unaffordable. By purchasing LTCI early, you can ensure that you'll have the coverage you need without draining your savings or relying on family. Take the time to assess your current situation and future needs, and make an informed decision to protect your wealth and health in the years to come. Chapter 4. How much coverage do you need? When it comes to long-term care insurance, LTCI, one of the most important decisions you'll make is determining how much coverage you need. The cost of long-term care can vary significantly depending on factors such as location, type of care required, and the duration of care. With this in mind, it's essential to choose the right amount of coverage to ensure you're adequately protected without overpaying for benefits you may not need. In this chapter, we will explore the key considerations when deciding how much LTCI coverage is right for you. We'll discuss how to evaluate your long-term care needs, how to calculate the potential costs, and how to balance affordability with sufficient protection. Ultimately, the goal is to ensure that your LTCI policy meets your specific needs and provides peace of mind without straining your financial situation. Understanding your long-term care needs. The first step in determining how much coverage you need is understanding your potential long-term care needs. While no one can predict exactly when or how they will need care, it's possible to estimate the type of care you may require based on your health, family history, and personal circumstances. Consider the following factors when assessing your needs. 1. Your age and health status. Your age and current health are two of the most significant factors in determining how much long-term care you may need. Generally, the older you are, the higher the likelihood that you will require some form of long-term care. For instance, people in their 60s or 70s are more likely to experience health issues that require assistance with daily activities than younger individuals. If you are relatively healthy and have no significant chronic conditions, you may need less coverage. On the other hand, if you have a family history of age-related diseases, such as Alzheimer's or Parkinson's, you may be at higher risk for requiring long-term care services in the future. Your current health status can also impact the type of care you'll need, whether that's in-home care, assisted living, or skilled nursing care. 2. Family history of illness. Family health history is another key factor to consider when determining how much LTCI coverage you need. If your parents or close relatives required long-term care due to chronic illness or cognitive decline, there's a higher likelihood that you may face similar challenges. By purchasing LTCI, you can ensure that you'll be financially prepared for the possibility of requiring extensive care in the future. 3. Lifestyle and risk factors. Your lifestyle choices, such as your activity level, diet, and health habits, can also impact your risk of needing long-term care. For instance, individuals who maintain a healthy diet, exercise regularly, and avoid smoking may be at a lower risk of developing chronic conditions that lead to long-term care needs. Conversely, individuals with high-risk lifestyles, such as those with sedentary habits or a history of substance abuse, may be at higher risk for requiring long-term care earlier in life. 4. Your personal preferences for care. It's also important to consider your preferences for long-term care. Some people may prefer to receive care at home, while others may feel more comfortable in a nursing home or assisted living facility. These preferences can impact the cost of care, as in-home care tends to be less expensive than facility-based care. Understanding your desired care setting can help guide your decision about how much coverage you need to ensure you have access to your preferred care environment. Estimating the cost of long-term care. Once you have a better understanding of your long-term care needs, the next step is to estimate the cost of care. Long-term care expenses can vary widely based on factors such as where you live, the type of care you need, and the duration of care. To estimate how much coverage you need, you should consider the following. 1. The cost of care in your area. Long-term care costs are highly variable, depending on the region. For example, the cost of nursing home care in a metropolitan area may be significantly higher than in rural areas. According to recent data, the average cost of a private room in a nursing home in the U.S. is over $100,000 per year. In-home care can also be expensive, with costs ranging from $20 to $30 per hour, depending on the level of care needed. It's essential to research the average cost of long-term care in your area to determine how much coverage you will need. Some LTCI policies offer geographic-specific options, allowing you to choose coverage that is tailored to the costs of care in your region. 2. The type of care you may need. The type of care you require will also significantly affect the cost. In-home care, where caregivers assist you with daily activities in the comfort of your home, tends to be less expensive than nursing home care. However, home health aides may need to visit multiple times a week, which can add up over time. On the other hand, a nursing home or assisted living facility provides 24-hour care and supervision, but comes at a much higher cost. Assisted living facilities typically cost between $3,000 and $6,000 per month, while nursing homes can cost upwards of $10,000 per month for a private room. Understanding the kind of care you prefer or anticipate needing will help you determine the appropriate amount of coverage for your policy. You should aim to have enough coverage to pay for both short-term and long-term care if necessary. 3. Duration of care. Another factor to consider is how long you may need care. Some individuals may only require a few months or a couple of years of long-term care, while others may need assistance for many years due to chronic illnesses or cognitive decline. The longer the duration of care, the more expensive it will be. Long-term care insurance policies typically offer benefit periods ranging from 2 to 5 years, but some policies offer lifetime coverage. It's important to evaluate how long you are likely to need care and choose a benefit period that aligns with your expectations. If you have a family history of long-term conditions like dementia, you may want to opt for a longer benefit period to ensure sufficient coverage. Determining the right coverage amount. Once you have a clear understanding of your potential care needs and the cost of care, the next step is determining how much LTCI coverage you need. Here are the key factors to keep in mind. Daily benefit amount. The daily benefit amount is the maximum amount your LTCI policy will pay per day toward your care expenses. The daily benefit should reflect the cost of care in your area. Be sure to consider whether the daily benefit will cover the majority of your care needs, or if you'll need additional savings to cover the gap. Benefit period. The benefit period refers to how long your policy will pay for care. Most policies offer benefit periods of 2, 3, or 5 years, though some offer longer options. If you have a family history of chronic illnesses, you may want to consider a longer benefit period. Elimination period. The elimination period is the waiting period before your policy benefits kick in. The longer the elimination period, the lower your premiums. However, you'll need to cover the costs out of pocket during this period, so it's important to choose an elimination period that works with your budget. Balancing affordability and coverage. One of the most important aspects of selecting LTCI coverage is balancing affordability with sufficient protection. While you don't want to underinsure yourself, you also don't want to overpay for coverage that exceeds your potential needs. Be sure to shop around and compare policies from different insurers to ensure that you're getting the best value. It's also important to factor in inflation protection. As the cost of care rises over time, you'll want to ensure that your policy's daily benefit amount increases in line with inflation. This will help protect you from future cost increases and ensure that your coverage remains adequate. Conclusion. Ensuring adequate coverage for the future. Determining how much long-term care insurance you need is a highly personalized decision. The right coverage depends on factors such as your health, lifestyle, family history, and the cost of care in your area. By carefully considering these factors and estimating your future care needs, you can select a policy that provides adequate protection without overburdening your finances. Remember, LTCI is an investment in your future well-being. By securing the right amount of coverage now, you can ensure that you won't have to worry about the high costs of long-term care later in life. Start by evaluating your needs, understanding the costs involved, and choosing a policy that fits your budget and long-term goals. With proper planning, you can safeguard your health, wealth, and peace of mind. Chapter 5. The Financial Benefits of LTCI. When we think about insurance, We often consider it as a safety net, something we hope we never need to use but are thankful for when we do. Long-term care insurance, LTCI, is no exception. While it's a policy that many people would rather not think about using, the financial benefits of having LTCI in place are immense. From protecting your assets to preserving your quality of life, LTCI is not just about covering care costs, it's about ensuring that you can enjoy a stable, worry-free future. In this chapter, we will explore the key financial benefits of long-term care insurance. We'll discuss how LTCI protects your wealth, alleviates the burden on family members, offers peace of mind, and contributes to your overall financial stability. Understanding these benefits will help you see LTCI not just as an expense, but as a crucial investment in your future well-being. Protecting your wealth from depletion. One of the primary financial benefits of LTCI is that it helps protect your wealth from the high costs of long-term care. Without LTCI, the cost of long-term care can quickly drain your savings, retirement accounts, and even assets like your home. The financial burden of care can be overwhelming, especially considering the rising costs of healthcare services. As mentioned earlier, the cost of long-term care can be astronomical. For instance, the average cost of a private room in a nursing home in the U.S. exceeds $100,000 per year. In-home care, although less expensive, can still run several $1,000s per month, depending on the level of assistance required. These costs can add up over time, and without LTCI, you could find yourself tapping into your retirement savings or other assets to cover the bills. This not only depletes your savings, but could also leave you with far less than what you intended to pass down to your heirs. LTCI serves as a financial safeguard against this risk. By having a policy in place, you can cover the cost of long-term care without having to rely on personal savings or liquidating assets. The policy will pay for care services, preserving your wealth and ensuring that your financial foundation remains intact, avoiding the financial burden on family members. Another significant benefit of LTCI is that it alleviates the financial burden on your family members. The cost of long-term care is not just a financial strain on individuals, it also places a tremendous emotional and physical burden on loved ones. Family members often take on the responsibility of caregiving, which can lead to stress, burnout, and financial strain of their own. Without LTCI, your family may be forced to help cover your care costs. If your family is unable or unwilling to contribute financially, this could lead to resentment, strained relationships, or even the need for family members to leave their jobs to provide care. In addition to this emotional and physical burden, the financial strain could impact your family's financial goals, including their ability to save for retirement, pay off debt, or invest in other opportunities. LTCI helps avoid this by ensuring that professional care services are covered, allowing your family to focus on being there for you emotionally rather than financially. This provides peace of mind not only for you, but for your loved ones as well. They can rest assured that they won't be financially responsible for the high costs of your care, which can often exceed the financial capabilities of many families. Preserving your quality of life. The financial benefits of LTCI are not limited to just covering the costs of care, they also help preserve your quality of life. The ability to choose your care setting and manage your daily routine is important for maintaining independence, dignity, and comfort as you age. Without LTCI, you may have fewer options available to you when it comes to choosing where and how you receive care. LTCI allows you to retain more control over your care decisions. With sufficient coverage, you can choose to receive care at home or in an assisted living facility, both of which may provide a higher level of comfort and independence than a nursing home. It also ensures that you can afford the type of care that aligns with your preferences, whether that involves in-home assistance or long-term care in a specialized facility. In the absence of LTCI, The need for care may force you into a situation where your options are limited, and you may have to rely on the care provided by family, or be placed in a facility that doesn't meet your standards. With LTCI, you can maintain a higher level of control over your care, ensuring that you live with dignity and comfort during your later years. Tax benefits of LTCI. In addition to protecting your wealth and preserving your quality of life, there are also potential tax benefits associated with long-term care insurance. Depending on your situation, the premiums you pay for LTCI may be tax-deductible, which can make it more affordable in the long term. For individuals who itemize deductions, long-term care insurance premiums may be deducted as part of their medical expenses. The IRS allows you to deduct medical expenses that exceed 7.5% of your adjusted gross income, AGI, which could include LTCI premiums. This can reduce your overall taxable income and provide immediate tax relief. The exact amount of premium you can deduct depends on your age and the IRS's limits on medical deductions. For business owners, LTCI premiums can also be deducted as part of business expenses. If you're self-employed or run a small business, you may be able to deduct your LTCI premiums as a business expense, which lowers your taxable income and reduces your overall tax liability. While these tax advantages may not cover the full cost of your LTCI premiums, they can help make the policy more affordable and provide additional financial benefits. LTCI as part of your financial strategy. LTCI is not just an insurance policy, it's an integral part of your overall financial strategy. Having LTCI in place can help preserve your retirement savings, reduce the financial burden on your family, and ensure that you can maintain control over your care options. In addition, it provides the peace of mind that comes with knowing you're prepared for the future, even if you need long-term care. Integrating LTCI into your financial strategy is about balancing risk and planning for the unexpected. While the possibility of needing long-term care might feel distant, the reality is that it's a risk that everyone faces. By purchasing LTCI, you're essentially managing that risk and ensuring that your financial future remains secure, regardless of what happens in terms of your health. When you factor LTCI into your overall financial plan, you also ensure that you can make choices that align with your lifestyle and values. It allows you to continue pursuing your long-term goals, whether that's enjoying your retirement, passing down wealth to your children, or contributing to charitable causes, without worrying about the financial impact of needing long-term care. Conclusion: a smart investment in your future. The financial benefits of long-term care insurance are clear. It protects your wealth, alleviates the financial burden on family members, ensures that you maintain a high quality of life, and even provides potential tax advantages. By securing the right coverage, you ensure that you're not left vulnerable to the high costs of long-term care, which can derail your financial future and disrupt your family's financial plans. While no one wants to think about needing long-term care, planning for it is one of the smartest financial decisions you can make. The earlier you purchase LTCI, the more affordable and comprehensive the policy will be, providing peace of mind for both you and your loved ones. By taking this proactive step, you're investing in a future where you can live with dignity, independence, and security without sacrificing the wealth and financial stability you've worked hard to build. Chapter 6. Making the right decision for you. When it comes to long-term care insurance (LTCI), making the right decision for your future is one of the most important steps you can take in your financial planning. LTCI is designed to protect your health, wealth, and peace of mind by covering the potentially catastrophic costs associated with long-term care. However, choosing the right LTCI policy involves more than just picking a plan. It's about making a decision that aligns with your personal needs, goals, and financial situation. In this chapter, we'll explore the key factors to consider when making the decision to purchase LTCI, how to assess your specific needs, and the steps you should take to ensure that you select the right policy for your unique situation. We'll also discuss how to integrate LTCI into your broader financial strategy and how to evaluate the options available to you. Understanding your personal needs. Before you even begin looking at policies, it's essential to understand your own personal needs and circumstances. The right LTCI policy is not a one-size-fits-all solution. The coverage you choose will depend on several factors, including your health, your family history, your lifestyle, and your long-term care preferences. Let's break down these key elements. 1. Health and family health history. Your current health and your family health history are two of the most important factors to consider when deciding whether to purchase LTCI and how much coverage to secure. If you are in your 40s or 50s and in good health, you may be able to qualify for more affordable premiums and broader coverage options. On the other hand, if you are dealing with chronic health conditions such as diabetes or heart disease, you may face higher premiums or even be ineligible for coverage. Additionally, if you have a family history of age-related conditions like Alzheimer's or Parkinson's disease, you may be at a higher risk of needing long-term care in the future. In such cases, it may be wise to purchase LTCI sooner rather than later, ensuring that you're financially protected should the need for long-term care arise. 2. Lifestyle and risk factors. Your lifestyle choices can also impact your need for long-term care insurance. A healthy lifestyle, regular exercise, a balanced diet, and avoiding smoking or excessive alcohol consumption can lower your risk of developing chronic illnesses that may require long-term care. If you live a relatively healthy life, you may need less coverage, or you may choose to delay purchasing LTCI. However, if your lifestyle involves significant health risks, such as sedentary habits or a family history of certain diseases, purchasing LTCI at an earlier age may offer greater protection. 3. Care preferences. Another important aspect of choosing the right LTCI policy is determining your preferences for long-term care. Would you prefer to receive care at home, or are you open to a nursing home or assisted living facility? Your care preferences will directly affect the type of coverage you'll need. In-home care typically costs less than nursing home care, but it can still be quite expensive depending on how much assistance you need. Choosing a policy that covers the type of care you want, whether that's in-home assistance, assisted living, or nursing home care, ensures that your plan is tailored to your specific needs. This allows you to maintain a higher degree of independence and comfort if you ever need long-term care services. Financial considerations. After understanding your personal needs, it's time to assess your financial situation. Long-term care insurance can be a significant expense, and it's important to ensure that the policy you choose fits within your budget while still providing adequate coverage. Here are a few financial factors to consider when making your decision. 1. Affordability of premiums. LTCI premiums can be costly, especially if you wait until later in life to purchase a policy. As you get older, the cost of premiums rises, and you may be faced with higher rates or fewer coverage options. To determine what you can afford, it's important to assess your current and future financial situation. Consider how much of your income or savings you are willing to allocate to long-term care insurance. It's essential to strike a balance between affordability and adequate coverage. Purchasing LTCI at a younger age can help you secure lower premiums, which can make the policy more manageable as you get older. 2. Premium increases over time. Another financial consideration is the potential for premium increases. While premiums are generally lower when you purchase LTCI at a younger age, they may increase over time. Some insurers may raise premiums periodically, which could impact your ability to afford coverage in the future. When evaluating LTCI policies, make sure to consider the possibility of future premium increases. It's crucial to ensure that you can comfortably afford the premiums over the long term, especially if your income decreases after retirement. 3. Inflation protection. Long-term care costs typically rise over time due to inflation. Therefore, it's essential to consider a policy that includes inflation protection. This feature automatically increases your coverage to account for rising costs in long-term care services. Inflation protection ensures that your coverage remains relevant and adequate as the cost of care increases over time. Without inflation protection, the value of your benefits may decline as care costs increase, leaving you underinsured when you need it most. While inflation protection can add to the cost of your premiums, it's often well worth the investment to ensure your benefits remain adequate in the future. 4. Tax advantages. One of the lesser-known benefits of LTCI is that the premiums you pay may be tax-deductible, depending on your situation. For individuals who itemize their deductions, the IRS allows for the deduction of medical expenses, which can include LTCI premiums. The tax advantages can help offset the cost of premiums and make the policy more affordable. For business owners, LTCI premiums may also be deductible as a business expense. If you are self-employed or own a small business, check with a tax professional to understand the specific tax benefits you can take advantage of. Choosing the right policy, coverage, and flexibility. Once you have assessed your personal and financial needs, the next step is selecting the right LTCI policy. There are several factors to consider when choosing a policy, including the amount of coverage, the duration of coverage, and the flexibility of the plan. Here are some things to look for. 1. Daily benefit amount. The daily benefit amount is the maximum amount your LTCI policy will pay for your care each day. To ensure that your policy covers the cost of care, it's essential to select a daily benefit amount that aligns with the average cost of long-term care in your area. If you choose a benefit amount that's too low, you may find that the policy doesn't cover enough of your care expenses. 2. Benefit period. The benefit period refers to how long the policy will pay for your care. Policies typically offer benefit periods of 2, 3, or 5 years, though some offer lifetime coverage. If you anticipate needing long-term care for an extended period, a longer benefit period will provide more comprehensive protection. However, longer benefit periods come with higher premiums, so it's important to choose a period that balances your care needs with your budget. 3. Elimination period. The elimination period is the waiting period before the policy's benefits begin. It's similar to a deductible in other types of insurance. The longer the elimination period, the lower your premiums will be. However, you'll need to pay for care out of pocket during this waiting period. Consider how long you can afford to pay for care before your insurance kicks in, and choose an elimination period that works for your financial situation. Working with an advisor. Choosing the right LTCI policy can be complicated, and there's no one-size-fits-all solution. Working with a financial advisor or insurance professional can help you navigate the process. An advisor can help you assess your needs, evaluate different policies, and ensure that the coverage you select aligns with your financial goals. An advisor can also help you understand the fine print of your policy, including any exclusions, waiting periods, or limitations on benefits. This ensures that you have a complete understanding of your coverage and how it will work when you need it most. Conclusion: making an informed decision. Making the right decision when it comes to long-term care insurance is about understanding your personal needs, assessing your financial situation, and choosing a policy that offers adequate coverage without overstretching your budget. By considering factors such as your health, family history, care preferences, and future needs, you can select the policy that provides the most value and peace of mind. Remember that LTCI is not just a financial decision, it's a key part of your overall long-term strategy. By planning ahead, you can ensure that you and your loved ones are protected against the high costs of long-term care, maintaining both your health and your wealth for years to come. As we move through life, we prepare for many aspects of our future retirement savings, buying a home, and creating financial stability. However, one of the most critical areas of planning that often gets overlooked is long-term care. The need for long-term care can arise unexpectedly, and without the right preparation, the financial consequences can be overwhelming. Long-term care insurance, LTCI, provides an invaluable safety net for the future. By securing a policy, you ensure that you are protected from the high costs of care that could deplete your savings, strain your family's resources, or leave you reliant on government assistance. LTCI gives you the ability to maintain control over your care and your wealth, ensuring that you can receive the care you need without sacrificing your quality of life. The decision to purchase LTCI is not just about safeguarding your financial future, it's about preserving your dignity and independence. With the right coverage in place, you can rest assured that you have a plan for the future, one that aligns with your health, lifestyle, and financial goals. Whether you choose traditional long-term care insurance, a hybrid policy, or asset-based coverage, having the right plan in place will provide you with peace of mind, knowing that your long-term care needs are accounted for. It's never too early to start thinking about long-term care. By purchasing LTCI in your 40 seconds or 50 seconds, you can lock in affordable premiums and ensure that you are financially prepared when the time comes. With the right coverage, you can navigate the challenges of aging with confidence, knowing that you have the financial protection you need to preserve both your health and your wealth. Start planning today and protect your future with long-term care insurance.